You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around these parts, the Options Insider Radio Network. Quite a few episodes of various programs on said network, including over 420 episodes of this fine program. The Option Block 427, if you count all of the sneak previews we did way back in September of 2010 before we launched the show. And if you actually count the number of hours, some of those shows are some of our live extravaganzas, which go well into several hours at least, if not three. So there was probably close to 440 hours of options goodness in that archive. And where can you find all that goodness? Well, of course, the mothership, the flagship, theoptionsinsider.com. Surf on over there. Click on the Insider Radio Network tab, and you're off to the races. Just select the Option Block there, click View Archives, and there you go. They're all there on that page for your listening and downloading and streaming pleasure. And, of course, you can also find them in all the finer podcast outlets, iTunes, Stitcher, AHA, Mobile, TuneIn, etc., etc. Or you can just grab the RSS feed, throw it into your app of choice. And if that's all too much for you, just grab our mobile app, available for iOS, Android, and the Fire OS. All right, and getting into the show proper today, the reason I bring up all those archive episodes, listeners, because we have a bit of a sad milestone on the program today. Like I said, this is official episode number 420, actual episode about 427 or so, and it also marks our final episode with the Viceroy. He's been on for several years now, not counting his early appearances when he rotated in for John and those guys on the trading desk. But Mr. Viceroy bringing his tenure on the Option Block, and indeed with Schwab, to an end in the very near future. So a bit of a sad day for us. So I want to, of course, give him pride of place at the introductions here at the show. Mr. Viceroy, welcome back to the show for indeed the final time.
Thanks, Mark. I appreciate that. And I actually would like a couple minutes at the end of the show to sort of say goodbye. But let's get away from that for a moment and let's focus on market activity today. Today was a very unusual day because today was one of those rare days, and maybe Andrew or Mike could chime in on this, but today was one of those days where every market in the world was up. I didn't have one red index on my screen today. We were up, Europe was up, Asia was up, and some of them were up big. So real interesting day. It was a worldwide rally on very modest interest rates. Not a ton of equity stuff going on, but just one of those. Came in the morning, we were up all day, looked around, and everybody else had been up, and everybody that was yet to open is up. So very, very interesting day. I'd be curious if my co-hosts have any thoughts on the last time they saw one of these every market was up days.
A bit of a weird one. Let me introduce those cohorts before we dive into the rest of the program. You have already invoked them. It should be no stranger to all of you out there in the listening audience, particularly all of you who have joined us for all 420-odd episodes. Of course, I'm referring to, first off, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always a pleasure to be here on this bittersweet day. But yeah, that's an interesting thing that Alex pointed out. When you first said that, Alex, that everything was up, the first thing that came to my mind was, well, wait a second, the bonds are down. But then again, I didn't realize you were talking about the stocks at first. So the other kind of unique thing about today is that Alex talked about the markets without mentioning anything about interest rates or the macro picture. So that was kind of a fun thing to hear too.
Yes, no macro talk. For that, we needed to turn, unfortunately, to the rock lobster himself, a man who never met a macro statistic he didn't like, Mr. Andrew Giovinazzi from the land known as OptionPit.com. Mr. Macro, a.k.a. Mr. Rock Lobster, welcome back to the old program, sir.
It is good to be back, Mr. Macro. That was funny. The macro lobster. I wonder what that would look like.
A very large, very boring.
Sad hat today.
Yeah, a very large, very boring lobster, I think.
I think so, but I'm wearing my sad hat. My hat is at half mast over my eyes.
It makes it hard to do the show. Thankfully, it is an audio show, so we don't need to see each other to get it done. So without further ado, let's roll right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. As the name implies, hopefully you guys have figured it out by now, but this is indeed the portion of the show where we break down what was going on in the old street today, in the old markets across the board. As the Viceroy alluded to, a bit of a weird one today, pretty much up across the board. All of the major indices up very, very aggressively. S&P up about 1.25 percentage points on the day, or a little over 25 handles to 2,086. The Dow, the leader of the charge today, up a full 1.5 percentage points, or about 262 handles to 17,974. And of course, the Qs themselves up about 1.2 percentage points as well. So tied in there with the percentage moves of the S&P, and of course, surprise, surprise, volatility taking on the chin a little bit today. VIX cash ticking off to the downside about 0.75 of a percentage point or so to about 14.21. We are recording this for all of you playing the home game listeners on Monday, March 30th. So bear that in mind with all of this data that we're talking about. And Alex raised a good point at the top of the show. It was kind of an up and away market, particularly if you don't count volatility, which we don't, because it should move in the opposite direction of everything else that we're talking about. So Uncle Mike, the Viceroy's question is still intact. Have you ever seen a day like today where, at least not in a while probably, where everything pretty much across the board was in green territory?
No, it feels like it's 2006 again in some ways, in that we're getting constant bulls. And then the thing that I remember just listening on the radio this morning in the car, just FXI or China is up a lot today too. So it feels kind of like a 2006 day in that China, FXI, for example, the China ETF, it's up 3.8% on the day. That's a big player today. And I guess just like the Lego movie says, everything is awesome today.
Everything is awesome indeed. That would be a good title for the show, if not for the obvious reasons why it would not apply. But of course, Mr. Rock Lobster, in addition to being such a macro fiend, and of course you do look at a lot of broad markets these days. Anything that Alex was mentioning before, anything that really catch your eye in terms of the fact that everything except for perhaps vol and a bit of the old fixed income really rallying hard today?
Yeah, I just, especially with the weekend, with VIX down so much coming off the weekend, that was a pretty big vol smack. I think ultimately this is, every time we have a rally like this, the reasons have always been the same. monetary policy will stay accommodative until global markets, basically governments digest all the money they borrowed and start paying it back. So you had some, China was going to do the easing thing. Europe seems to be doing it, but the data there gets better. Yellen had dovish comments on Friday. And all those things, even though they're taking the so-called, they're taking the guidance sort of away where they could change their mind at any time, it's still, they're pretty much talking markets up. So, and you're right. China, for all of the Chinese slowdown, as Mike said, I don't know what slowdown they're talking about because I don't know when the last time that index was at the level it's currently trading at. I think it's been look at this 3-year high for FXI. So that it's actually a 3-year high too on a big spike in volatility. So we'll see how long that 10% rally lasts. About an 8% rally over the last week. Usually when you have that big of a rally and the vol moves up like that, it's not sustainable, which just gives me an idea for a trade tomorrow. Be that as it may, I think ultimately this is all that kind of low interest rate fueled rally. And that's what we got. And stocks so far have liked that.
Yes, indeed. A lot of stocks have liked that today, including one of the OX stalwarts. Of course, we're talking Tesla. It seems like any time Elon Musk tweets, the stock rallies about a couple of percentage points. Today was no exception. They tweeted some vague hints at a new product that probably won't be a car. I think a lot of people were excited that it was going to be that new SUV they've been rumoring for a while, but apparently it's not going to be. I'm not sure. Haven't had a chance to see the latest news if they've actually revealed what this product is going to be, but nonetheless, this stock moving off the rumor, which is pretty much all Tesla does is move off of rumors, up about 3% today, or nearly 6 handles on the day, to right around 190, just near 191, and a pretty active day from an option perspective as well, about 1.5 times ADV, 150-odd thousand contracts versus about 100,000 their ADV of late. Not as call heavy as you might expect. It's only about 1.4 to 1 out there. So there was a lot of put action out there, which is not what you usually see in Tesla land. Usually this is one of those names that the zealots are out in force. The call wing is rich. People don't like to sell it. And it's kind of like the old days of Apple when it was kind of just rah, 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 up, buy nothing but calls and you'll do all right. We've seen a lot of that in Tesla. It come off a bit of late as the stock has come off a bit of late, but still there are those zealots out there who can do naught but buy calls. Today, so far, at least only about 1.4 to 1 of those, about 90,000 calls, about 65,000 puts. So not as perhaps overwhelmingly call heavy, particularly with the underlying move, as you might expect. Mr. Viceroy, was Tesla lighting up the boards over there at OX today?
Yeah, and in fact, today was one of those days when just everything was trading. And I know on some days I have exactly the opposite comment, that the markets were up, but it didn't feel like an up day. Today was an up day. Today the money flows were into the things that were higher. The momentum stocks, the Teslas, the Amazons were higher. Baidu was up. Baba wasn't, interestingly enough, on the Japanese run. As I say, an interesting day. I mean, I've been around a long time, and I can't remember a day, with the exception of when we've had big sell-offs, and the next day you get the reaction, kind of the worldwide reaction bounce. But this is a rare event in my memory, just to see nothing but green lights out there. And if you pull your economics book off the shelf and say, look, as Andrew mentioned, the Chinese are going to stimulate, the Europeans are going to stimulate, rates are so low. I mean, if I'm the Germans or the Japanese or the Brits, I can borrow so cheap right now, especially in Germany. The Bund is a 0.18 yield. Why would you not be borrowing long and stimulating? I've just never seen an environment like this, and today was really interesting. And kind of the message there is that monetary policy seems to be working. And I know as soon as that comment is out of my mouth, somebody's going to look back and say, well, remember this administration when they tried to do it and it didn't work. Right now it's working.
Certainly seems that way. Market in rally ho mode pretty much across the board. In addition to Tesla, a lot of other interesting things catching our eye out there on the old street today. This is usually a topic we would touch on the Trading Tech Talk show. We certainly probably will on our next episode, but it's certainly of interest to our listeners here as well. You may have heard, listeners, the conversation that Mark Sebastian actually had recently with Ben Londergan from ConvergeX over there, where they put out an annual survey of the institutional side of the marketplace. I remember talking with the then CEO of Liquid Point a year ago or so at the Options Industry Conference about the results of that survey. It was kind of immediately in the wake of Flash Boys talking about the impact of HFT and other things on the marketplace, and there were some pretty alarming stats coming out of that survey. Well, they conducted that survey again this year. We, of course, are about a year past Flash Boys now, so some of that immediate rhetoric, some of that immediate hype about retail being demonstrably impacted by all these HFT activity and rigging the markets, et cetera, et cetera. Some of that has started to die down, and this survey seems to support that. This year, the proportion of financial professionals who said that the market isn't fair to all was only 57%, so still a majority, but down significantly from the 70% of almost a year ago. And then the belief of that high-frequency trading is harmful fell to 36% from 51%. So it was over a half a year ago and only about a third or so now. Their CEO, Eric Knoll, said the general sense is the house might not be on fire. And what really struck me about the study is there are a lot of issues that they don't want, but they don't want regulation to fix them. They want a market solution. Not surprising. I think we've expressed that viewpoint here on the show as well. A bunch of diehard libertarians on the show here at the end of the day when it comes to a market structure. But still interesting stuff. Perhaps the world is not on fire as a lot of people perhaps initially thought in the wake of the Flash Boys hysteria. Now, we'll get into this a lot more on Trading Tech Talk, but I thought I would open it up here because I know a lot of our active retail listeners like to hear this kind of stuff too. Mr. Rock Lobster, does any of this come as a surprise to you, or is this pretty much what you expected?
I said this before, and I'll say it again. Does it matter? Does it affect the retail trader, for a penny? Probably not. Is it necessarily fair that somebody can kind of race, that high frequency trading can basically race an order, or somehow an order loses price time priority? I still think they need to settle out that issue, because they just have to make the playing field sort of level as far as, when all these micro bits come flying through the exchanges. But ultimately, that it doesn't really matter. And I know, as a liquidity provider once, they are providing some liquidity at times, and there are other times where if they cannot pump their quotes in the market, they just leave. So I don't think the only thing that I wasn't too thrilled with in general was just the way the price time priority gets messed up. How can they actually race an order after something technically should be in the queue? That all was still a little confusing to me. But, as long as somebody has an order in there first, and as far as price time priority is maintained, then I don't see what the problem is. But as you can tell, as the market has screamed to new highs, the average 401k investor probably is not doing too bad.
Yeah, they're not as concerned about these other issues. When the market's rallying, they're happy at the end of the day. Speaking of concerns and the average guy versus the HFT, some other interesting, perhaps a corollary to that earlier study, an interesting one. And I think people who listen to this show on the network know I tend to take a dim view of some of these academic studies that attempt to delve into the vagaries of the marketplace without really perhaps having a full understanding of how the marketplace works. You could perhaps label that against this study as well, but still on the surface, it's an interesting idea. Again, this is the kind of study where it could really fall apart by the mechanics. I haven't had a chance to examine all of the underpinnings of the research except for the actual underlying that they used. But this was another study coming out examining what we were just talking about, examining what the hell these HFT guys really doing? How much are they actually making from these events and these types of strategies that people have been labeling against them of, stuffing the books and doing all this manipulation, getting in ahead of the queue in some of these orders, et cetera, et cetera. We had a couple of researchers out of Emory University, a bastion of financial research. Of course, I'm teasing, about how much what they call the fastest firms earn with two key financial products after major U.S. economic data comes out. And what they found in aggregate was that what they term, at least algorithmic traders, made about $24,000 per event with the S&P 500. So the SPY, essentially shares of SPY and the E-mini futures, what they looked at for this study, and $75,000, about 3x with the E-mini contracts. And what they said is that pales in comparison to the $100 million of total trading after such reports, according to the paper. They said they're not able to make a lot of money from exploiting slow investors following macroeconomic news. So they say concerns that they're exploiting slow investors, aka retail investors, may be overstated. Again, kind of coming in a year later, post-Flash Boys, to kind of look at some of the actual data and say perhaps that early hype was a wee bit exaggerated. Again, you could probably pick a lot of holes with this study. They even mentioned themselves, they only look at SPY and E-minis, and that's it, not even any of the derivatives on that. So they don't look at the options, they don't look at anything else, just those products. And so that could, of course, is limiting in and of itself because sophisticated traders are going into those products as well. And also there's a lot of questions as to how they actually term what an algorithmic trader is, how they identify these people, how they're trading and tracking what profits they're actually making. Everyone who knows and listened to this show for a while knows that that's a difficult thing to really get a handle on. But still, maybe in the aggregate, in the 10,000-foot perspective, it is kind of an interesting thing. And they say the findings indicate profits from event-driven trading may be substantial, or may not be substantial, at least not for any given economic report, saying that perhaps a lot of the low-hanging fruit has been kind of gobbled up. And they also say, looking at their methodology, at least for finding these profits, from 2008 to 2013, the smallest annual earnings that they found using this methodology were generated this past year. So that is, if any indication that maybe perhaps the low-hanging fruit is gone, then that is perhaps it. Alex, I know you're probably like me, you take a dim view of a lot of these academic studies that may or may not really understand what they're talking about, but still there is some interesting stuff here. Has any of this come as a surprise to you, or is this pretty much what you expected here?
No, and I think I'll make 2 points. The salad days of high-frequency trading were 2012 and 2013. If I remember when Michael Lewis did his book, he looked at 2013 profits from what he identified as the high-frequency firms, and they were $1.3 billion. And the other point I want to make to Andrew's point, they provide liquidity when they want, and they don't provide liquidity, and they fade the market when they don't see profitable opportunities. So, they're not really liquidity providers. I mean, I've worked at 2 exchanges, and a fight you had with customers, I don't mean a dispute, I mean a fight you had with customers is, you had the raised bandits at SIBO, and you had all kinds of electronic trading people who would arb, front run, call it what you will, the retail business. And what did it do? It drove institutions upstairs, and now you have so many places to trade that I would argue that markets have become fragmented. You have so many different models, maker-taker, time price, that people are gaming the models. And as I said before on this show, I think maker-taker needs to come to an end. I think it's cocked up the business a lot. I don't know if that's a legal term, but it's screwed up the business a lot, if you want to edit that. And the thing about the high-frequency firms right now in 2015 is they're not making much money. They've had a ton of scrutiny, and firms have adjusted for it. But, here's the fundamental question, and this hits to Andrew's point. There are people who provide liquidity. There are market makers, specialists, DPMs, whatever you want to call them. And we're the people, as customers, we pay them to provide liquidity. And they take risk, and sometimes they make money, and sometimes they lose money. Then you have people who come in and carp the event, and carping, as I was taught the term when I first came to the CBOE, was carping a market is kind of moving between the two natural markets and trying to take some liquidity and then get out as fast as you could. So a trader on the floor, let's say a market was $3.05 to $3.15, and that was customers and market makers. A trader might come in and try to carp the market at 310, get a fill, and run out of the pit. I'm oversimplifying it. I'm making it overly black and white, but people who game the order flow shouldn't be there. I don't think they provide genuine liquidity. The fight you always had at CBOE and at the ISE are people who would say, I want to be on both sides. I want to be both on the bid and offer of a spider option, or I want to be both on the bid and offer of an apple option. And you say, can't be. You can't be. That's the market maker. That's what they pay for. And that's the advantage they're entitled to. And they say, yeah, but we provide liquidity. And say, fine, Spider, Apple don't need liquidity. Go provide liquidity somewhere else. Go down into General Motors, or go down into outside of the top 20 names that do 80% of the volume. And the immediate reaction was generally, no. I don't want to provide liquidity there. So it's a tough argument, but to Andrew's point, they're there when they need to be, and they're not there when they don't want to be. That's not a liquidity provider. That's somebody who's carping the opportunity in the marketplace.
Well said, sir. As always, that was a very seminal moment in the options market, certainly for a lot of professional traders and market makers who had come up on that. They had come to rely, myself included, on the fact that bid-offer spread was sacrosanct. If a broker came in with an order, they had to improve the market to trade it. They couldn't just cross it on your bid-offer spread. And when that went away, when that bid-offer spread stopped being a sacrosanct thing and anyone could come in and play on that and cross orders on your offer, on your bid, that was when a lot of guys, myself included, started seeing the writing on the wall and saying, well, clearly this way of life is not long for the world when even this basic protection is no longer there for us. So interesting stuff, an interesting viewpoint. Certainly, I think a lot of our listeners would probably share that. But meanwhile, it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, before we get into the Odd Block, Mr. Viceroy, you had a couple things you wanted to add on that last point?
I mean, you raised a real interesting point. You were a trader on the floor of the CBOE, which meant that if I were a broker and I walked into your crowd, I could look to you for a market, right? I could make you make a two-sided market.
That was the gist.
Do high-frequency traders, are they required to do that?
No, they have zero obligations in the traditional sense.
That's the problem.
Yeah, that's a point I bring up quite a bit with the heads of most of the exchanges whenever we do our big roundtables at the big conferences like OIC. We'll be doing that again in a month or so down in sunny South Beach, so stay tuned for that, listeners. And I'll certainly bring that up. I bring that up to them every year, and they all kind of acknowledge that it's a problem, but they also are now all for-profit public companies. They need to get transaction revenue. They don't care really where it comes from at this point. So if they're one of their traditional subsidiaries, when the traditional classes of the marketplace is disenfranchised in the process, that's not really their primary concern. And that was pretty clear very, very early on, even at the CBOE, where, once that bid-offer spread went away in terms of protection, it was clear, the writing was on the wall. The market makers were clearly the last in line when it came to priority. But then again, we can talk about this for a long time. Perhaps we will again in the future, Mr. Viceroy. But meanwhile, we have to dive right on in to the Odd Block today. Of course, listeners, if you don't know by now, this is indeed the portion of the show where we break down the weird, the wild, the wonderful, the sometimes just weird and head-scratching paper that is lighting up the old the old options market today. Going to kick things off actually with a weird one. Again, the odd block. This is Tyson Foods. Haven't talked about this one in a little while. Ticker symbol TSN, trading right around 38.5, closing right around 38.5 today, up about 30 or so cents on the day, right nearly at 1%. This is the name that does about 3,800 contracts a day, doing nearly 8x that, doing about 24,000 or so contracts today. Very, very aggressive day. Big C on the old board for this one today. Corporate action coming in Tyson Foods, and we saw some options activity on that as a result. Let's pull up first off here. It was in the July expiration cycle where we first saw the first leg of this trade. In particular, we profiled it this morning on the site, 7,000 of the July 36 puts going up, total of about 73.58 going up on that strike today, all on open interest of just 300 some odd contracts. And then turning around to the other side of the fence, the Jan side of the fence, which I mentioned earlier, it was the Jan 30 puts going up 5,250 times. So a bit of a ratio, 7 to 5 or so on those, all going up net for 50 cents. Went up in 2 blocks on our old friend, the Philly, where a lot of these spreads still go up because there still is some floor activity there. Looking for a markdown here. Looking at least, that's what we're thinking, a bit of a drawdown here in the old Tyson Foods. Mr. Rock Lobster, walk our listeners through what they announced today in terms of a corporate action going on out here in Tyson, as well as what our friend here actually did, because it looks like they were opening on both legs, both the July and the Jan.
I did not get the corporate action. I'm sorry. Somehow I missed that looking at this thing. Was there a stock split?
They are acquiring Hillshire Brands. I just saw it for $63 per share in cash. Yes.
Oh, okay. That just kind of snuck through. All right. How did I miss that? Very, very odd. I'm looking even at I guess they've always wanted to buy them. I thought that's been around for a while. Anyway.
Of course, it's weird. As you say that, it's flagged here on my system, but it also is saying the date on that announcement is June 16th of 2014. So perhaps they bought them last year. Perhaps this is an aberrant flag on my system, and I'll have to speak to these people about flagging bad news here on my system. By the way, there was some activity going on out here. Size puts. Walk our listeners through what exactly we saw out here in these just July-Jan ratio put spread.
This to me was just bizarre. It looked like priced like a backward diagonal where they bought the July 36 puts and they sold the Jan 2016 30 puts. Do you ever see a diagonal go up that way where you're buying the near term in the money put and then you're selling the long term out of the money put?
That's what I thought looking at the paper. That was my first blush of what they were doing. And that's why I wanted to toss it to you first, because you actually wrote this up for the site for us. So because it seems so odd, I didn't want to read it out that way at first.
Well, the thing is, I actually saw it we're profiling another one, thus the show, the odd block, where it's got to be the same fund, right? I don't know why you do. I mean, the only thing I could think of is you're looking at where the market's going to sell off and you're going to make money on your 36 puts, and then you want to take the stock at 30. And they're going to make a bunch of money if that happens. But as of right now, I mean, if we just rock it up, or they're trying, because I didn't see any stock go against it, so it could be a protected play where they're trying to build in another leg to get long in the 30s. So it was, I don't know, I would put this in the Tosaw list, like what do you do with this trade?
Yeah, we profile a lot of weird stuff, and on the surface this may seem straightforward, but this is one of the weirder ones I think we've profiled. I'm trying to think the last time we had anybody, put diagonals, we see those go up. 99.9% of the time they are usually on the same, are buying. They're buying the long term, selling the near term as a way to kind of finance that. They roll the sale whenever that expires to help get some near term financing. This strategy, this strikes near term in terms of the July, a little bit farther out on the Jan. Clearly getting short deltas in the near term is a much more relevant strike. So buying a bunch of the 36 puts in July, selling the 30s in Jan. You're right, Andrew. I'm on that weird ratio, biased towards the short term, biased towards the buying side of it as opposed to the selling side of it. Yeah, I can't recall ever in the history of our oddities ever discussing a trade of its ilk before. Can you?
No, and it was straight up lifting the offer. I mean, these are vanilla markets. The guy put up $1.40 in size on a 20-cent wide market and sold 90 cents. I mean, the only thing I can think of is somebody's trying to ladder. They own stock. They want to maybe buy some short-term protection. And, because they did buy 7,000 over 5,000, maybe they're long 200,000 shares. And, somehow they're trying to ladder an entry. But, what the heck? I got no clue. This is the weirdest diagonal plus. Like, how do you make money on it? It's decaying like crazy. Yeah, so if Tyson doesn't just tank, you're hosed.
That's the question. I mean, loading up on the long leg, the near-term leg on a ratio like that, yeah, that's all kinds of weird. He really wanted some...
Get smoked on your long puts, and then you have the short ones. I guess that'll pay for part of the puts.
Some. Yeah, but those aren't decaying for a long time. Those are Jan. And, yeah, this is an interesting one. Listeners, if you have your own ideas, send them in. We'd love to hear from you. By the way, that I just checked, and that flagging of a corporate action was indeed erroneous. They completed that acquisition on August 28th of 2014, so I'm not sure why they're flagging a big corporate action here in Tyson Foods, but c'est la vie, a conversation for another day. But a bit of a weird one to start things off here in the old Odd Block, and hell, that's what the Blah Block's all about, listeners. Finding some weird ones, and I think we found a good one for you today. Again, write in with your own ideas. Why would you do that? Why would you do a ratio down and out diagonal put spread of that time horizon, but ratio longer to the longs in the near term, and then also sell it even farther out of the money, less relevant? But yeah, the whole thing is just interesting. I'd be curious to hear your reasons why, or perhaps more importantly, why you wouldn't do that. Meanwhile, we're going to move on to our next victim here in the old Odd Block. This is HCP Inc., ticker symbol, appropriately enough, HCP. Closing today, $43.81, up about 4% on the day. It's the name that does about 2,000 contracts a day, doing about 12x that today, about 24,000 today. And just to give you a hint of what was going up today, of that 24,000, about 23,500 came in the calls. So 28-1 calls over puts out here today. And let's dive into what we actually saw in the calls. Things like rolling and some time spreads and diagonals is kind of the order of the day today, because that's kind of what we saw out here as well. It started off profiling the April 42 halves going up, and we started profiling about 3,256 times, and then turning around the other side of that spread being the old May 45s. This looks like a standard up and out open interest of 17,667 on that strike. As the day progressed, a lot more of this spread went up to the tune of just a hair under 14,000 of those April 42 halves going up. Looks like paper selling and then coming in to gobble up the May 45. So it looks like our friend here done all right on those 42 halves. They're clearly in the money right now, so perhaps taking a little bit of some money off the table. Usually when you see the up and outs and they have some money to burn, they do a little bit more, or at least equal on the ratios. Here he's doing it about 1/2, but the opposite way. So kind of interesting, about 7,500 total going up of the May 45s on open interest of just 33 cents. At least that initial kind they did for 70 cents. So collecting on that end, obviously, because the 42 halves being in the money. But still an interesting one. Mr. Rock Lobster, what you take here on our friend going the other way than our other friend, up and out the other way, and ratioing it the other way as well here in HCP.
Yeah, so this is a REIT, right? HCP, they're a healthcare REIT. When was the last time you saw paper buying calls in a REIT? Yeah,
so they invest in real estate serving the healthcare industry. So there you go, healthcare REIT, yes.
Okay, so we've profiled probably 50 overriders on a REIT, right? We just did like a couple of weeks ago on the show.
At least, and they were doing pretty well. They were getting like 4 to 7% for a couple of months.
Yeah, but when was the last time somebody bought a call in a REIT?
It's been a while. To be fair, he did sell more than he bought to the tune of 2-1, so he is a net seller.
Yeah, but I think I thought weren't they closing that April?
Yeah,
there's 17,000 open interest.
Looks like closing, yeah.
So I'm most likely thinking they're close. So And then you got the rally today. So you're thinking, well, maybe rates kind of stay this low for the whole year. And everybody all of a sudden is like, we're going to pile back into the REITs and do it again like we did last year. So maybe just some nirvana bullishness here on some of this stuff. Because you don't really see people buying call and REITs because they kind of go up, slowly. And I think maybe that's why some of the volume was less. They were looking for a bounce. They got it a little late, and they're looking to stay long, essentially. So, but I think they want to maintain their long position. They just probably didn't make as much as they wanted to on the first go around. So, but strange again. It's like Bizarro odd block. Diagonals are backwards. People are buying calls and REITs instead of selling them. Bizarro world.
If that wasn't enough bizarro weird diagonals for you listeners, we got one more for you, this time coming in the land of Dick's Sporting Goods, ticker symbol DKS, closing today here under $58 a share, up about $1 or so on the day. So a decent day for Dick's. This is a name that does about 2,400 contracts a day, doing about 8,000 today. And the lion's share of that activity coming in yet again, a diagonal put spread. And this time it was the April 57 half, May 52 half put spread going up for 60 cents. When we first started profiling it, the ratio was 3,250 of the 857 half puts to 2,000 of the May 52 half puts, so about 3.2 to 1. As the day went on, that ratio got a little bit stranger, about 4,800 total of the 857 half puts versus 3,254 of the May 52 half puts. So again, a bit of a weird ratio. I don't have the prices on that, the later kind of those spreads. They went up, at least the initial version, in several blocks. Again, on open interest of both strikes of pretty much non-existent, 80 and 1. So there you go. All opening paper. So unlike some of the other diagonals we talked about, this is clearly opening paper here on both legs here. In good old Dick's. Mr. Rock Lobster, yet another weird reverse diagonal here going up. Walk us through this final weird diagonal going up, this time in Dick's Sporting Goods.
So this feels like a trade that's just made to be smoked. You're buying the 857 puts, you're selling the Mays, $5 spread, diagonal spread, and you need Dick's to fall apart. So unless they want a massively bearish trade short term, in selling the out of the money put May doesn't no good anyway. I mean, I don't know. I have not the clue in the world why anybody would want to execute this spread unless you own some stock and you're trying to maybe ladder in May and you're just a little worried about the short term. But you just have to think, wow, why sell the May calls? It's not the May puts. It's not like they're decaying anyway, It's all too bizarre. That's all I can say.
This is clearly the same backwards hedge fund that was also playing in Tyson Foods today.
They read somebody's book on something.
And they read it the wrong way.
It upside down.
They read it backwards. They said, how does this time decay thing work? Okay, we're going to do the opposite of that. And that's going to be our strategy. And we'll clearly set ourselves apart from everyone else out there. And that it won't work.
So if Dick's is down $8 tomorrow, okay, the guy was brilliant. But then I'm gonna just throw this whole trade to the exchange flag. Maybe they just say, we're gonna put up something so bizarre that no exchange will ever bother to bug us because we know that the stock is gonna tank. They're not gonna bother with anybody that does an inverse diagonal put spread.
Yeah, that's we've never really talked about one of these before, and have to have two in the same odd block. Something strange is afoot out there, listeners, so be afraid, be very afraid. The weird ratio diagonal put spreaders are out in force. I'm not sure what that means for the markets as a whole, but interesting stuff for us to ponder as we keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know what time it is. It's time for Uncle Mike to come on down from the mountains to essentially dispense some wit and wisdom on this very special episode of the Option Block. Uncle Mike, take it away. The floor is yours.
All right, today's kind of a special occasion. So for the Strategy Block today, I'm going to go over a strategy with which I have been telling option traders for over 10 years now. And that strategy is that if you ever hear Alex Jacobson speaking, or if you ever know of that he's going to speak, you don't walk, you run to make sure that you get a seat in that room to hear what this man has to say. I want to tell you a story about when I first met Alex. I was a brand new hire at Options Express over 10 years ago, or about 10 years ago. And so I was going to do my first event on my own. My boss said, I'm going to send you down to this event down in Florida, and I want you to do this event. It's a smaller event, but it'll be good for you to just kind of get your feet wet. There'll probably be maybe like 25 people there. Eventually, at that time, we were doing events of 500,000 people, and eventually I did that a couple years later, or actually a few months later. But for my first event that I was going to do alone without any other help from Options Express, it was going to be this smaller event. And so what it was we were just a guest speaker for another education company. I don't even remember who it was, to tell you the truth. But in there was some other educators there, some industry veterans, and there was this guy that was there from the ISE. His name was Alex Jacobson. And so he introduced himself to me. He seemed like a pretty friendly guy. But then as I was speaking, all of a sudden I would say something, and then so he would say, no, you're totally wrong on that. Totally rudely interrupt the entire speech and just barge in and tell me how wrong I was. So I'm like, okay, moving on. And so I tried to keep the speech as safe as I could, make it as generic as I could. But by the end of the speech, this man from the ISE named Alex Jacobson literally said, well, hopefully you get a good lawyer, because maybe you can meet Martha Stewart in prison or something, but you're going to jail. That's what he told me in front of the whole crowd. So at that point, I realized, well, I don't know if there's many other speeches that are going to go much worse than this. It was even worse than the time in Miami when I forgot I was in Miami and I told them that I played for the Buffalo Bills and I about got booed off the stage. So at the end of it, Alex came up to me. He said, hey, Mike, pay no attention to anything that I just said. Your boss put me up to this, and he wanted to see how you could fare under pressure and see how you handled everything, and I thought you did a great job. And from then on, I realized, wow, this is kind of a neat thing here. This is I was really put to the test here, and I guess I passed, because the man who basically had said that I had passed the test, so to speak, was Alex Jacobson. And I knew who he was beforehand, but I didn't know that I was being put up to that. And so with that, through the years, I really got to know Alex just from seeing him at other events when he was working for the ISE and I was working for Options Express. And every time that there was some type of an event, if the ISE and Options Express were there, I'd always make it a point to try and arrange my speaking schedule so that it would not go at the same time as Alex's, so I could see what Alex had to say. And I never went to a speech with Alex ever that I didn't learn something. And I'm telling you, folks, when this man gets wound up, he really gets into it. I've seen him on stage hitting himself on the head saying, if you bought those calls on that stock at that volatility and that price, you should be hitting yourself on the head right now. And it was the most engaging speech ever. I've never seen a speaker that passionate about options. And I'm like, wow, this is like the Babe Ruth, Michael Jordan, Bill Walsh, Walter Payton all rolled into one with option trading right here. And so just as time went by, I wasn't really going on the road that much, so I hadn't seen Alex in a few years. And then when I found out he was going to come onto this show, I'll be honest with you, I was a little bit nervous about it. But it's just, Alex, it's been a joy working with you since you've been on the show. The same thing holds true now as it did when I was watching you speak in the old days. And I think I learned something almost every day listening to you on the show. It's been a joy to work with you, and you will be greatly missed. That is for sure.
Thank you, Mike. I'm misting up, but thank you for those wonderful comments.
Yeah, I think we'll bring the show to a close with a little bit different format than we usually do. Usually we'll dive right into the around the block, but like I said, it's a little bit of a bittersweet episode. It's our final episode with the Viceroy, as well as our final episode in partnership with the good folks over there at Options Express / Charles Schwab. As you guys who know have been listening for a long time, they really helped get this show rolling way back in the dark days of 2010. After a lot of back and forth about how could we do the show, how could we do a show together, we finally finally hit upon this idea. We launched it in September 2010, and here we are 4+ years later, still going strong. And of course, this is the Viceroy's final episode as well as the Charles Schwab. And I would just echo what Mike was saying there as well. I met Alex, well before we started doing the show together, when he was still at ISE as well, doing education. And I like the fact that another exchange out there, aside from the SIBO, is actually investing heavily in education and sending such an experienced guy out there like Alex to handle a lot of that education. So when he suddenly landed at OX after having been at ISE, I thought this is a perfect fit. I've known Alex for years, a great fit to come on the show. So when he came on, I was pretty excited. No disrespect to all the other guys who were on. They were all great too. John and Tim and pretty much everybody, Rob, that we've had from OX on the show over the years. But Alex has a unique delivery, a unique perspective on the business, and it's been great having you on the show. So in these final, 5 or 10 minutes or so, Alex, you got anything you want to share with our listeners? Any final memories? Any final things you want to leave them with? The floor is yours, sir.
Yeah, thank you, Mark. I just want to make a brief comment, and let me preface this by saying I'm not leaving the industry. That's kind of not the case. But as we get to the sort of the end of today's podcast, I just want to share with everyone that I am leaving the Options Insider, the Option Block. And I will miss spending every Monday and Thursday with everyone here. But I know that the crew that stays here, Uncle Mike, Andrew, the two Marks, will keep on entertaining and educating you all in the months and years to come. I want to thank everybody. I want to thank all the listeners. I want to thank all the crew. I want to thank all the crew here at OX who's come on with me. As you mentioned, John and Tim and the product development people. It has been the joy, and it's very melancholy to be kind of losing the podcast. But today's my last podcast, and I just want to thank everyone.
Well, Alex, I think I speak for all of us here on the show when we indeed thank you for being on the show, having so many great episodes. And I think all of us look forward to seeing what it is that you actually do next, because we know you do indeed have a few cards up your sleeve, and we can't wait to see you play them. Don't worry, Alex isn't going away. He's not leaving the business, not by a long shot, listeners. And so we'll be sure to check in with whatever his newest endeavor is post Options Express very shortly. And speaking of post Options Express, like I mentioned, this is our final episode in partnership with Options Express. It has been a great 4+ years. You can't really ask for much more than that from a partner of a program like this. When we started off with some initial ideas of what could we do, something a little bit different, something a little bit more fun, a little bit more robust, aimed specifically at the options market, in particular the active retail traders. We started off kind of just getting our feet wet with it, and pretty soon it was up to twice a week and really just topping the iTunes charts and knocking it out of the park. And that's been a lot of that thanks to the support they've given us over the years. So, and certainly this is not the end of the program, not by a long shot. It's just going to be a little bit different going forward. So for the latter part of this week, of course, we're coming up on the holiday season with Good Friday. The markets will be closed, and I will be actually on vacation for the latter portion of this week. So we're going to take the latter part of this week off, and then we'll be back in force. Don't worry, listeners. Next week on Monday, same bat time, same bat channel, sans Viceroy, but still with the same great show you guys have come to know and love. And very soon, I hope to have some very big announcements about what we're doing with the show moving forward. As you know, we like to partner with players in this space, in particular for a show like this, the brokers that cater to the active retail options community. And we are very hot and heavy talking to a lot of different firms out there. Obviously, it's a very popular show, so a lot of people want to be a part of it, and we'll make our final determinations, because it's important to us to find a partner that really understands what this show is about, and they can help bring the quality content that you guys have come to expect over the years to this program going forward. So we're in that process now of evaluating different partners. I hope to have some announcements for you, perhaps even fairly soon. And we'll definitely be back again next week on the same bat time, same bat channel, with a lot more that you guys can enjoy here from the Options Oddities programs. We'll be back recording again on Monday, April 2nd, after the big holiday break. So that's going to do it for this episode 420 of the Option Block, 427 if you count all of the other episodes. A little bit of a bittersweet ending. Alex, I know you can't really tell us what you're doing next, but if you want to leave any cool hints or teases or anything like that as for your final around the block in terms of what you're watching, as well as what you may be up to in the future, any hints you can, go ahead, sir. The floor is yours once again.
I really can't, but what are we watching? It's been macro. I was stunned by today's every market was up, and continuing to watch the 10-year rate, and a point that Uncle Mike makes all the time. I'd like to see a breakout on the averages, because at that point I think we're going to power higher.
Thank you for that in our final check-in with the Viceroy. Uncle Mike, same question for you. What are you watching for very briefly for the week to come, as well as what's coming on the pike over there in the land of RCM?
Just getting geared up for earnings coming up with Apple in another few weeks. Just also wanted to say it would have broken my heart had Alex not said the word macro in his last around the block in some way, shape, or form. And just excited about the coming weeks, and we'll break out one of these days, I think, but we will see.
And last but certainly not least, Mr. Rock Lobster, what are you watching for the rest of this week, and what's coming on the pike in the land of the pit?
Non-farm payrolls on Friday. I'm just looking in to see if this interest rate, I'm just saying, I mean, this just still feels like kind of a liquidity-fueled rally from everybody taking a big collective breath after the Fed chairman's comments. I think slowly but surely, people like where low rates are going to be here for a while until we really have some smoking global economic growth, and I think that's a lot of what we're seeing.
All right, thank you for that, Mr. Rock Lobster. And one last time, on behalf of the Viceroy and the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there for downloading and streaming and listening to the show for 420 plus episodes. Don't worry, taking a little bit of a break towards the end of this week, but we'll be back next week, recording on Monday, April 2nd. You'll be hearing it on the morning of Tuesday, April 3rd, like always. So don't worry, we'll be back with a lot more Option Block coming down the pike really soon.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.